We have Mr. N. Kamakodi. He's the CEO and MD at City Union Bank with us on the show. Thank you for joining in, Mr. Kamakodi. To start off with, the loan book, can you just tell us what it's currently at and the target that you have for 2018?
In fact, we expected that we should be growing between 15 to 18% for the financial year ending 31st March 2017. But because of the demonetization issues, the third quarter was actually we had a negative growth. So we ended up the year between 12 to 15% growth rate for the financial year 31st March 2017. This year we expect we should be growing between 15 and 18%, and things should start moving up from this particular point of time.
Right. What about strategic goals which you have set for yourself on most aspects? You know, the metrics essentially that we're following: loan growth, disbursements, advances. That's on the one hand, and other parameters as well.
If you had a chance to look into the performance of the City Union Bank over a period of 10 to 15 years, reasonably longer period, we had always kept the efficiency and the profitability parameter as the top goals, and we had never been like say running behind the size per se. So we had for the entire 15 years, every year almost we had shown a return on assets of 1.5% and return on equity. We used to have up to 20%, but it got to somewhere 15 to 16% after we went for the capital raising and all. Our cost to income ratio had always been between 40 and 42. So our focus per se will be to just move forward, be one of the top efficient and profitable banks, maintain a growth rate which is slightly above or above the industry average growth, and going forward 15 to 18% for the current year, and whatever that is possible we have to go. That is what these are all the broader parameters what we have positioned for us. In terms of geographical expansion, about 75% of our operations, business and profit and all comes from the south. Moving forward for the next 5 years, how we have kept is that, like say, the incremental business will be by and large, may not be that 75%, there will be some shortfall, but we will continue to be a south centric bank as we move forward for the next 5 to maybe 3 to 5 years time horizon as we look into.
And finally, you've recently tied up for bank assurance. Can you tell us what are the plans there?
See, we in fact we are very clear and categorical that we are not a very strong bank in terms of the third party distribution or third party product distribution or other fee based income. We measure our performance by what is called as other income. Other income basically will be comprising of all our core fee income plus the profit what we book on the treasury, and the profit what we get from the write back of return of assets and all other assets put together. We have consistently maintained that this three streams of other income put together, they roughly take care of about not less than about like say about 70% of our total non-interest expenditure, which means that we are able to make about 70% of our operating, net interest income as the operating profit, which is also one of the top 10-15 percentile in the banking industry. We continue to grow ahead with that. If you specifically about bank assurance, we have from the beginning we have tied up ourselves with the Life Insurance Corporation of India, and we are having a reasonably good tie-up, and we used to continue with them as we move forward. They are also one of our shareholders who supported us during our initial period of capital raising.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at @etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/etnow.